largest battery manufacturers in the listed space, Amara Raja Batteries and Exide Industries, have corrected 39% and 29% from their 52-week high, respectively, due to concern with regards to severe shortage of semiconductors impacting the demand from OEMs and commodity-linked cost pressure impacting their profitability. The fall in stock prices got aggravated due to broader market correction. We believe the current stock prices offer favorable risk reward to investors given the strong standing of these companies, rising demand both from auto and industrial space. Also, the semiconductor shortage has started easing and is expected to wane in the months to come. In Q2 FY22, we saw a significant pickup in demand for two-wheelers and passenger cars as reflected in their quarterly numbers. Amara Raja posted a strong 17% year-on-year growth in top line, driven by a 20% volume growth in two-wheelers replacement segment and 11% volume growth in cars replacement segment. Industrial segment volume also witnessed a reasonable growth of 11%. Volume from OEMs, however, remained muted. Exide also posted a healthy year-on-year growth of 19.5% in its top line, driven by strong growth in replacement market and industrial segment. As per the management, two-wheelers and passenger cars are expected to continue the momentum driven by pent-up demand. Management is quite upbeat about these segments and has indicated that the preference for personal transport will continue to be a key growth driver. The commercial vehicle segment has also started catching up fast. In fact, the union budget had promised a huge increase in investment to revive economic growth. This is a positive development for the construction and the capital goods sectors. This is expected to boost CV sector demand. Also, government scrappage policy will boost CV volumes. With the economy returning to normalcy, the industrial segment is seeing significant traction. As government investment in these pockets picks up, demand for batteries is expected to see a strong uptick. Despite muted demand from OEMs due to severe shortage of semiconductors, battery manufacturers posted a strong growth in top line led by significant pickup in replacement demand. And these companies generate significant revenues from this segment. Around 45% of the total revenues of both Amara Raja and Exide come from replacement demand. Lead is the key raw material for these companies. Its price is up by a significant 20 to 22% on year-on-year basis. If the uptrend continues, operating margins of these companies may come under pressure. However, companies are taking various measures to arrest the impact of rising raw material prices. For instance, ARBL took price hike of 7 to 8% on year-on-year basis to pass on the cost inflation. Further, ARBL has embarked an outlay of 280 crore rupees for backward integration. It plans to set up a lead recycling unit with a 1 lakh ton capacity. It is also setting up a solar power plant with a 50 megawatts capacity at an outlay of 220 crore rupees. All these efforts are expected to save costs from FY23 and provide a long-term solution to rising raw material prices. Electric vehicles provide a fresh opportunity for battery manufacturers, and they are working on a plan to make EV batteries. ARBL is coming up with a 100 megawatt hour lithium-ion battery plant in Andhra Pradesh to charge up its EV strategy. It has already launched e-rickshaw battery and started supplying batteries to OEMs. It has also started supplying chargers to BPCL and is in the process of developing board charger for 2 watts and 3 watts. ARBL has also opened an advanced lithium technology research hub with a pilot plant facility for a cell development project based on the technology transferred by ISRO. On the lithium-ion front, Exide continues to invest in its subsidiary Exide Leclanche Energy and work on developing batteries for EVs. It is also in the process to set up the first lithium-ion battery cell manufacturing facility in India called Advanced Cell Chemistry Project. In terms of valuations, ARBL is now trading at 13.1 times FY23 projected earnings. Exide is trading at 14.3 times FY23 projected earnings. ARBL and Exide are trading at 39% and 25% discount to their 10-year average valuation, respectively. We advise investors to accumulate these stocks for the long term. Any weakness in the auto segment can adversely affect the financial performance of these companies. Further, any rise in raw material prices and as an adverse movement of the rupee against the dollar could also hurt operating profitability.